Welcome to Stocks in Translation. I am your host, Jared Blickery, alongside Alexandra Canal. Thank you for joining us here again. And Sydney's going to be back next episode. But before we begin, be sure to like, subscribe, and comment on Stocks in Translation on Spotify, Apple Music, YouTube, wherever you get your podcast. And today we are welcoming Bhargav Shivarthy. He is CEO. Hello there, CEO of Pricing Culture. This is a brand new artificial intelligence startup in the content space. We're going to be talking about how you're transforming big data narratives into content that's useful. So first, before we begin, let me tell you what's going to be happening this show. We have a word of the day that is sentiment. You can trade off it, you can feel it, but can artificial intelligence, can it understand it? And this episode is brought to you by the number 91. That's the percent of investment managers that are currently using or planning to integrate AI in their strategies. Makes you wonder what the other 9% are thinking. And Bhargav, let's start off with where we are. We're not talking about what stocks and bonds are doing today. We're talking about the state of artificial intelligence in media. A little inside baseball, but where are we here?
There's a lot of stuff that's happened. LLMs have shown up 2-3 years ago. All kinds of applications are being built. What we are focused on is taking large data sets and using LLMs and AI in what they're good at, which is like scanning large amounts of data and providing signals to the human or the people that then add context and add narratives and opinions on top of what the AI has found. So what we focus on Pricing Culture is literally taking large data sets. This could be auction pricing of art. It could be Rolex watch pricing or Hermes bag prices.
Very hot now.
Building indexes with them, talking about the market for that stuff, and making it available to professionals that can view the data-driven narratives and make a call. Is this something that their audiences want to talk about? We started with cultural assets. So we started with vintage wine, cars, classic cars.
Watches, you mentioned.
Watches, handbags, stuff. Passion assets or cultural assets. And since then, we've now exposed ourselves to way more data sets. So stock market data, technical indicators, earnings calls, summaries, things like that, where we bring that data, summarize it, and let a human add opinion and context to it.
Excellent. And we're going to dig into all of that. And first, I want to get now to our word of the day, which is sentiment, because this is a people side of the equation. Sentiment is the general attitude or feeling that people hold toward a topic. And in finance, it indicates investor optimism, which can be bullish, or pessimism, which is bearish, about the market. So a lot of the things you're building here, as you're saying, they're meant to help humans come to an opinion, which might involve sentiment. I'm just wondering how you think about this word.
Sentiment is really great, right? So there's retail investor sentiment, there's institutional sentiment, and all these are now trackable, right? Like you have an index that tracks, I believe, institutional sentiment. I think it's the AI.
Yeah, we just got the AAII. It actually showed a big drop in institutional investor sentiment. Individual investor sentiment. So anyway, you were...
So we have institutional sentiment in the AAII. We have platforms like StockTwits or Twitter or Reddit where people are talking about stocks, and you can make the argument that polling for sentiment there is a good indicator of retail investor sentiment. And how, sentiment is used in positioning of portfolios or holdings is up to the human that's about to make that decision, right? I'm not sure we're there where the AI itself can do all these things yet, but it can definitely scan the world of sentiment and bring forth anomalies for the human who has an expertise to make the call of how that could impact a stock or his position or his portfolio.
And you seem to have a very bullish outlook when it comes to artificial intelligence. And it's interesting because over the past year or so, there have been some folks that have come out there and they're scared about AI. They're scared about AI taking people's jobs. For those that are afraid about the disruption that AI could cause, what are they getting wrong? Why should they be more optimistic?
Whose job are you supplying, not taking?
It's a great question. Any new technology, when it shows up, will scare people because it looks like magic a little bit. But when you dig in a little bit, what you see is what it's going to do is really augment our lives. What it's going to do is help us do the stuff that we do better, faster. For example, scanning for stocks, right? You can come in the morning and you can run your filters, and then you now know, here are the stocks I want to look out for today. It might be technical indicators, it might be an earnings call coming up, but these are stocks that I want to kind of keep an eye on today. And then you got to go do a ton of research in each of those individual names. Maybe you want to go look at the PE ratio. Maybe you want to look at the last dividend payment. What did they say at the last call, right? And that takes a lot of time, right? So the figuring out what the universe you want to look at today, now, this month, that's one piece of work.
Sure.
Then it's the research. And then it's like adding your opinion or context as a specialist of what you see. What AI will help us do is do that first chunk really, really fast. So we can just focus on opinions, what our expertise says about the data we're looking at, right?
Yeah.
And just removes that layer of like having to spend maybe an hour researching a stock before you spend 20 minutes writing the story you want to write, right?
Well, here's what's interesting, I think, about what you're doing is a lot of other enterprises that are using AI in the content space, they're kind of competing with traditional media, and I think that's fine if you can do that. But they're adding to this content overload a lot of times that we have, and we're just as consumers. If I put my consumer of media hat on, we're trying to filter through all this stuff. So you're actually providing narrative and summary sources for vast amounts of data that's currently unexplored.
Yep.
And so you're really not adding to this huge pile of content of stuff that we're already talking about. This is just new content.
Yep.
How do you decide what goes in? Like, do you just find this stuff by scouring the internet? How do you find the material?
Oh, the data itself,
Yes.
we get from a variety of data sources, right? We buy data, we index data from publicly available sources, like the SEC is available.
Like
for
watches,
API.
for instance.
Watches, we have APIs with a lot of the platforms that supply us the data. So the platforms that make markets in secondary watches or Hermes bags give us the data to use to write our stories, build our indexes. But I want to touch upon the point you were making earlier, which is this content, this feeling of that we have content overload.
Mm-hmm.
And what I think me and my co-founder Ted Mers have found is like there isn't really content overload. It's like there's a lot of content on a very narrow bunch of topics, right?
There's a lot in finance.
There's a lot in finance, but even inside of finance, there's a lot on NVIDIA.
Yes.
There is nothing on this Peruvian miner out in Peru or this Indonesian copper like supplier,
Sure.
right? Because no one's writing about it because like you don't have the time to do it. But what if we can get that data and show it to the specialist, which is the human or the journalist or the finance reporter, and have them make the call? They didn't even know this was happening in Indonesia, but now they do. And then it's about like, okay, do you want to write that story or not? So if you ask the question of whether how we decide what to write about, we just write about everything because we can.
Because
Right?
it feels counterintuitive, right? Because it feels
bit.
like AI, like to your point that you were saying, Jared, it's bringing in new content, but then is it getting buried by everything that we've talked about? Like you mentioned, NVIDIA. This is a story that we talk about every day on the show.
Yeah, discovery is a whole other thing.
There's no content. There's no
Exactly.
dearth in content on NVIDIA stock, right? Like it's enough.
But that is the moment right now.
Yep.
That is what people, and it's because of artificial intelligence that
Yep.
we're seeing
Yep.
NVIDIA come to the forefront. So when we talk about search and discoverability and sort of getting those stories that maybe are underreported, how is it able to sift through the noise? Because you're missing that human element of curiosity. Because isn't AI just sort of circling
How do you
things
know-
that are already in the zeitgeist?
Or how do you filter out, like, how do you make sure you're not missing something that's
Right.
buried in the data? Maybe.
So we do it. So it's great questions. We just write stories because the data exists to write stories, right? We don't worry about will somebody read it, right? We just write it because the data tells us something happened here, right? There was a anomaly in the gas exports of a country in Southeast Asia. We get that from the pipeline people, the companies that run the pipelines in that country. And so we just write the story because we just saw that in the data, right? Until it's written, it's funny. It's like, until it's written, the answers are all there. It's like, until it's written, it's not there, right?
Right.
And so, yeah, we sift through all the data available, things that humans really can't do. We can't do this, right? We have 1,000 things to do.
Yes.
We're not going to sift through data. We let the machines do that, and we bring that intel to the people who have the expertise to make those decisions, right? This is important. This
So
is
there's
not
going to be necessarily a lot of things that people don't necessarily latch onto that your software is bringing to light.
Correct.
And what's really interesting to me is that you're not necessarily concerned about the end demand for any particular story. You're just trying to get all the stories based on the data out there and then leave that to some other decision maker, currently human.
Yep.
And as reporters,
yes.
we're always looking for what are
Right.
people reading.
I mean, we need filters too.
Yeah.
Like, it'd be nice not to chase a story that is about NVIDIA, but also relates to AI and has some new angle. And, we're always looking for that.
Yeah, so we think about it as units of intelligence, right? There's units of intelligence in all these data sets. How do we extract that and bring it in front of the person with the expertise to make something of it, right? What we find a lot is there is I'll give you an example. In March of this year, we get data from a vendor called CarbonArc, who gives us data on DMV registrations. At the DMV, 99% of the DMVs report to CarbonArc. So with a 30-day lag, we see all vehicle registrations in the United States. It's in the data. It's a big chunk of data that just drops. We analyze that data to write vehicle registration reports for each brand. So Tesla has one, Nissan has one. We started to see in March of this year, Cybertruck's registrations were like 800% growth rates. And they stayed consistent in March, up 800%, new vehicle registrations. April, up another 800%. And in September, if you were walking out on the streets of New York, and this was in the Northeast, we saw them, a bunch of DMVs in the
So you saw all this coming.
Was coming. And then my wife, 2 weeks ago, was like, what are these sci-fi looking things on the street?
You are seeing a lot more Cybertrucks out there.
And that's we saw that in the data, and maybe people wouldn't have seen it if they read the report. They see it in Feb of this year, right?
Really interesting. Hold that thought right there, because we do need to take a really short break. Coming up, we're going to be talking about AI adoption in finance, and we take a trip to the future on today's Who Wore It Better. This episode brought to you by the number 91. That is a percentage of asset managers who are currently using or planning to use AI in their strategies, according to a recent Mercer survey. Breaking it down further, Bhargav, 54% are currently using and 37% intend to start. So bottom line, more than half the people managing money are using. The rest of them seem to have a lot of FOMO here. 91% adoption or want to. What is the investment community saying, or what are they saying to you in terms of the data that they're looking for? Is there just this unlimited demand by hedge funds, or are they somewhat selective? How does that look like?
We definitely see more traction amongst hedge funds. They're just used to this kind of stuff.
And they buy a lot of data.
They buy a lot of data. They've been using algorithmic trading for a while. This problem that folks talk about, hallucinations, they're not scared about it because they see that it's just noise and signal in their view, right? Hallucinations is just another form of noise.
It's really bad when it makes it to the front page of a newspaper, but
that's right. That's right. Of course, I think something happened recently, right?
There's been a few.
For sure. But on the hedge fund side, we see a lot of demand on just what we're talking about, right? There's this treasure trove of data. What is the signal? How do we use AI, LLMs to kind of look at the patterns and find certain things we want to dig into, right? It's not necessarily trading yet. I don't think I've spoken to any of the big quant guys who are letting AI trade, but they're definitely using it for research, to look at data sets, stuff that humans can't possibly cover in 24 hours.
I was curious, you've been talking about your product, and it's kind of for, it seems, institutional investors, but I'm wondering, anything for retail investors, or how do you see this kind of software making its way eventually to the retail investor?
Yeah, we actually launched a couple of months ago a site, machinegenerated.com. People can go take a look at feeds. They're priced, these are institutional grade feeds, priced at I think the cheapest one is $4.99 a month. And all it does is it looks at all the agency publications, U.S. agency publications, whether it's the Fed minutes, the CPI numbers from the BLS, USDA numbers from U.S. agencies. And as soon as it's published, it summarizes it and provides a link to go read more. Key highlights, here's what you got to care about, but here's a link to go read more. So we have feeds for individuals, but I think our biggest market are enterprises, institutions, publishing houses, folks like that.
So how do you protect yourself against inaccuracies with artificial intelligence, especially AI-generated content? Because I know sometimes when I read an AI-generated story, there are things that are clearly wrong that they didn't pick up on yet, and maybe we're just early in the AI cycle. But how do you find that out and make sure that you're not consistently doing that you're preventing against that?
And you can see how that's really critical in finance, right? Getting a number wrong, getting a direction wrong.
Yes.
It's problematic, to say the least. we've built this stuff from the ground up with that in mind, right? Finance audiences in mind, people who are going to make investment decisions in mind. The way we write our reports might be different from other AI startups doing this, is we don't leave the critical calculations to the AI. That's all done by our team of specialists.
When you say critical calculations, what do you?
So let's say we get a dump vehicle registrations we were talking about, right? We get a big payload of like, here are the millions of cars registered, make, model. Well, you need to know how much was the rate of change in Tesla this month versus last month. What was it in September last year? Is there seasonality to it? Is there an average September that we should compare against? We don't let the LLM do those calculations. We do all that in-house. We build what we call a data block, where we put all these calculations that we can track back to the author, a human, a person that sat there with a degree and said, this is what I need to look at in this data, and here's how I'm going to write my calculations. And we let the LLM or the AI do the dumbest thing, right? Which is like, okay, here is the number, here is a number.
Okay.
Fed the words that make the numbers.
The gathering in
No,
more or
not
less? Or?
well. That we do that on the classification side, but when we talk about writing a story where the hallucination can come up, right, where it says like this thing went up when actually it went down.
Right.
We were asking the LM to do the calculation and talk about it. We just don't let it do calculations. We only let it do. So we won't throw a data set to it and say like, hey, is Tesla up or down? We calculate if Tesla is up or down and tell it Tesla is up.
That's critical because I've seen that particular error pop up many times in automated feeds.
Of course.
I'm just there's a lot of chain of custody stuff going on here, and I know your partner here, Ted Mers, spent 32 years at Bloomberg. He was high up in Bloomberg automation, so I can see how this is evolving. But tell me the importance of having all of this mapped out, having all your ducks in a row, knowing, having experienced veterans on the team. Here's where you need to have your checks and balances. Like, put it all together for us.
So Ted joined a couple of months ago, but he's been working with us since we started as a company. He's been super helpful, spending tons of time with us. And 4 months ago, when we launched the machine-generated site with content feeds, automated content feeds for professionals, enterprises, and individuals, it just made sense. He was already working with us every day.
You said 4 hours a day on the phone.
4 hours a day with me on the phone. And like one evening, it was late, and I was like, you should just be part of the team. And it was just a natural fit. So what Ted brings that the team didn't have, frankly, before him, was the knowledge of how the consumers of our feeds want to consume the feed, right? I can sit down and write all the stories I can want because there's tons of data. We can report on anything, right?
So you're talking framing here? Or?
Framing, or like this is what people care about, right? Like you don't need to worry about talking about this other. Just compare it seasonally to this month, last month, the month prior, and that's enough. People will go and dig more if they wanted to. That's been hugely helpful. Just helping us think about. When we think about financial news consumers, I mean, it's Bloomberg. He ran automated news there. He was doing this before LLMs were there, basic automations.
Yeah, I mean, so automation and AI has been a part of businesses for a long time.
For a long time.
LLMs.
For a long time.
So as someone who's working with AI day in and day out, where do you foresee the future heading?
And how quickly?
10 years, 15 years from now, I mean, what
years?
world are we going to live in? And how quickly could we get there?
I think it's going to be much faster than what we think.
This segues perfectly.
I think it's going to happen way faster than people think. There is fear when things happen fast and things change. But if you view it from the lens of there's tons of stuff people spend time doing that they shouldn't have to spend time doing, then it's liberating, right? It's going to give us time as humanity to kind of, upskill ourselves in things that are, more valuable, right? Make us, work on things that we didn't have time to work on before, right? Things that are interesting, creativity. We're not going to see. You might see movies, AI-generated movies show up, but humans are creative. You're not going to go replace that. And so imagine a world where all we're doing is not the mundane tasks, but the things that we are specialized in. In the stock market, instead, if I could tell every reporter, I'm going to get rid of your research work, and give you everything that you wanted. And of course, you can tell me that that's wrong. Give me something better. This is not how I view the market. I view it in this lens, a technical lens, like our friend JC, who might say like, hey, I want technical indicators to trigger an alert. Sure, let's go get all that stuff, do the homework, the groundwork, and give you everything so you can just make the call. You can then say, that's not important. That is important. Oh, what's going on in that space? Let me dig in more. And now I've just saved you, 40% of your time that you took to write the story. And so can you write more stories? Can you go deeper into specific stories, right? Stuff
Well,
that,
see, that's why I think that I'm very bullish on this for humanity, because that gives us a lot of time to do the things that we want to do.
That's right.
I don't see it as stealing too many of the jobs that we want to do. But all right, lots of speculation here. We're going to ask you to do some more, because on today's Who Wore It Better, we're traveling into the future, Allie. The year is 2027. The holy grail, artificial general intelligence, is in sight. And it's a whole new ballgame for humanity. With advances accelerating in healthcare and robotics, it's a veritable age of magic. And amid all the excitement, an important question for humanity looms: who gets to tell our stories? And how much of this enterprise do we cede to the algos? So, Bhargav, it's no small question that I pose to you now. Who wears the future of humanity's stories better? Is it us, the humans, or AI bots? Do they just take over the
Loaded
entire...
question.
Yes.
Look, I will always lean towards humans on all this stuff. If you think about ourselves, we're carbon-based computing devices, There's silicon-based computing devices that we've invented, that we've injected like commoditized general intelligence into it. Like this notion that we're going to get. I don't think LLMs are the path to AGI. So
Interesting.
that might be like
that's a separate conversation.
That might be
but that's
hearsay.
fine.
That in the crowd, the AI startups that I work with. I should not be saying this probably, but I don't think humans are about predicting the next best thing.
Okay. That's a very important prediction.
Because there's creativity, right? And that doesn't come from just like being able to predict the next word really well, right? Which is what an LLM does. It's really good at predicting the next word based on a bunch of stuff, right? So I don't. AGI is just it's out there. I wouldn't expect it to show up in a material way. But we can absolutely see this stuff, like you said, liberating us. And in terms of telling stories, I think humans are going to tell better stories.
I got to agree with you there.
Yeah,
I think we're the
There's
masters of
empathy
that.
element. And even our recent episode of Stocks and Translation with Carla
Yes.
Cox, she talked about how there's empathy missing in
Wall Street.
finance and on Wall Street.
Yep.
And then you think about this AI revolution and these literal robots that don't have feelings, sort of not controlling the narrative, but having definitely
A heavy hand in it sometimes.
Yeah.
I think that is where the fear ultimately lies. But you're saying that isn't really taking that away from humanity.
Humans, we connect to humans, right? There's it's more than this spoken word. It's more than how we talk to each other. It's more than the words that are coming out of my mouth right now, right? We communicate in ways with other humans that, a machine cannot replace that. So if you ask me, like, who can tell a better story in the future? Is it a human or a machine? I'd say it's like machines can get really good at mimicking somebody who's a great storyteller, right? But it's not going to be able to do it itself, right? It might be a mishmash of a bunch of great writers who tell stories. So now you have this new AI thing that's like a mix of a bunch of great writers who's telling a certain style, sure, but it all came from a human, right?
I tend to agree with you. On that note, I guess we got to wind things down here. Make sure to check out other episodes of Stocks in Translation on the Yahoo Finance site and on our mobile app. We're also on all your favorite podcast platforms. You know them well: YouTube, Apple, Spotify, iHeart, Podtail, Pod Paradise, and more. Keep your dial tuned to Yahoo Finance.